Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. As usual, we will start our research from the daily time frame of the euro currency. Well, as you can see, in the previous 5 days in a row, market stands in a relatively tight range. So we could say that this could indicate some kind of the market indecision that has started from the respect of that solid area of resistance. If you remember, this is the daily confluence resistance, and market has started respect of it by this nice dark cloud cover pattern, candlestick pattern, and later market follows some kind of the ranging with this long tails and very small bodies. Market has opened almost in the same area where it has closed. So that consolidation also gives us the potential for the Jordan Napoli double repo sell pattern. Well, in general, we expect some retracement, at least the 600 retracement to the downside, because if you will take a look at the weekly time frame and even on the daily time frame, this swing to the upside is the first pullback, solid pullback after the long-term bear trend. And as a rule, the odds suggest that the first pullbacks very often and almost always shows the deep retracement after the initial swing to the upside, just by the momentum of the market. This is the technical issue. So since market has long-term solid downward momentum, the first pullback usually switches to the solid retracement to the downside. That is what we particularly expect based on the price action on the weekly time frame. And this retracement to the downside could be triggered by the Jordan Napoli directional pattern that calls the double repo sell. For that pattern, we need the thrust to the upside that we have here. We have discussed it during the previous week. Close below this green line, that is 3x3 moving average. That marked with the number 1. This is the close below the 3x3. That was close lower than this green line. Close above it. This is the number 2. On the Friday trading session, market has closed above this trend line. And to confirm this pattern as the trigger bar, we need the second close below this green line. When the market will show the second close, this will be the signal bar to enter on the short side of the market with the potential target at minimum is 128.60, based on the another Jordan Napoli pattern that is forming on the weekly time frame that calls the bread and butter sell. If you would like to learn more about these patterns and take a look in our weekly research, you could visit our forum on ForexPeaceArmy.com and read this, as well as the intraday chart analysis and analysis of the monthly time frame. So that's why in the coming week we will wait the confirming and the triggering of this potential pattern. At the same time, market could create the new high before we'll show the close below this green line. Both scenarios will be approximately acceptable for us. Either market will show the new high and close below 3x3, or will not show the new high. Both of these scenarios will be acceptable. The one thing that we would not, that bears do not want to see, is the close and continuation above the 133 area, because in this case, the second top and the continuation will be too extended, too far from the previous high, and that will probably cancel this potential double repo and tell us that the retracement could start from the next area of resistance that stands right here, 134.50, 135.05 area. Well, for that purpose we need to take a look at the intraday charts to understand how the potential scenario could develop on Monday, Tuesday trading sessions, and what levels, what kind of price action we should expect and be aware of. That is for our time frame that we also discussed on Friday trading session. That is our butterfly that we also have taken a look yesterday. So we said that probably market could show some deeper retracement to finish this ABCD pattern. And if you would like to anticipate this butterfly, it's better to place stop below the swing low, below the crucial point for the butterfly. So you can see that despite the nice number of the non-farm payrolls that have been released on Friday, and this some move to the downside, completing to this A, B, C, top, D pattern. Okay, this butterfly still holds. And the nearest target of this butterfly that is acceptable for the triggering of the double repo sale patch on the daily time frame is right here. It's 132.80, 132.90 areas, 127 extension of that swing from that high to that low. 127 extension is right here. That is the target of this potential reversal point of this butterfly. If market will proceed above this level and accelerates to the 1618 extension, this probably will cancel the double repo context, and we will not able to rely on it anymore. Well, we need to the development of the scenarios follows. Market should continue move to the upside, take out that high, and then returns right back. This will be the wash and rinse, a completement of this butterfly and wash and rinse of the previous highs. That will be the bearish scenario, and in this case we even could try to anticipate the double repo sale pattern on the daily time frame and start to trade it with this butterfly pattern. That will be the perfect entry if market will accomplish this. Another level what we have to watch for is right here, 132.61. This is the inner ABCD pattern, A, B, C bottom, D is right here. This will lead also to the wash and rinse, so if market will hit that target, take out that high, and returns right back. This will be also the bearish scenario, but in this case this butterfly will not be completed. But both of these scenarios are acceptable for bearish double repo sell on the daily time frame. And the third moment, if market will fail to continue move to the upside and just take out this low, this will be also suitable for bearish scenario on daily time frame. Again, the one thing that bears do not want to see is the acceleration above the 133. If this will happen, that will cancel the reversal by this butterfly. It will cancel the potential double repo sale, I suppose, on the daily time frame. So maybe it sounds a bit confusing, but and it makes things to read this in our forum. And again, just to explain you the logic of the current potential patterns on the bearish patterns on the daily and intraday charts. Here we need the clouds below the 3x3. At the same time, if market will show the takeout of that high, moving somewhere around to 132.80 area or even 132.60 by inner ABCD that we have discussed, and then returns right below that level, this will be the wash and rinse of this high and the bearish signal. I prefer that double repo pattern will create the new high, because this will trigger the break-even traders who will enter on the long side of the market when the market will take out that high, and when they will be trapped in the wrong position, their stops will add fuel to the down move. That's why the appearance of the new high during the double repo pattern is preferable. The suitable levels that market could reach, 132.60 is the inner ABCD pattern, that pattern, or 132.85, 132.90 by this butterfly pattern. It's right here. So market should return and show the washness, and then have to return back below this high. If this will happen, this will give us the confidence that market is ready to continue move to the downside, because that will be the bearish patterns on the intraday charts. This will be the bearish pattern as the wash and rinse on the daily time frame. That will give us the confidence that probably market will accelerate lower and is ready to continue move to the 128.60. If market will hold above this level, above the 133, will hold there and accelerate further, then this will cancel this potential double repo sale, and we will have to watch for over this level, 134.60, 135/5 confluence resistance. On the hourly time frame, we do not have any much to add. Just one thing that probably you can see, this bullish divergence that give us some hint on the potential move to the upside. Market probably will continue move to the upside. If you will take a look at this pattern, A, B, C pattern with very shallow ABCD, you'll see that 100% extension also stands around this red line. That's weekly pivot resistance 1 for the coming week. It's around 132.50 area. So that is an area also to watch for. A couple of levels, 132.60, 132.80 area as the potential reversal. When market will hit it, watch how market will respond. We need returns right back below this high. If this will happen, then this will be a nice context to the potential entry on the short side of the market. Or that is also will be suitable for the bears if market will fail, continue move to the upside and just erase this butterfly by taking out this low. If this will happen, this also will be the bearish scenario that could lead to the triggering of the double repo pattern on the daily time frame.